Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your agriculture update for this Monday, and this is the 27th of February, 2017, about 2:10 p.m. Central Standard Time. And as we take a look, you can see that all the grains are in the red, with the wheat getting hit the hardest. Now, it's interesting. We're going to be ending up, give you an example, in Chicago, which we don't grow a lot of grain right here, but around us, of course, they do. But in Chicago, this will now be 2 months in a row, all of January and February, without any measurable snowfall, not 1 inch. That is amazing. I don't remember this since I'm a kid, anything like this. And yes, we're going to be in the 60s tomorrow. We're in the 30s today, but now we start going into March, and you can even hit 70s in the March. So we're ending this in an interesting time, and the question is, of course, what does it mean in the prairies and so on, because they didn't get all that amount of snow. Parts did. I mean, the Dakotas did. If you look at California, you see that. But it's things you've got to start thinking about. Dollar index barely higher at the expense of a euro, which got up a lot higher than this and has suddenly given up a big chunk of that. Tomorrow we're going to get the speech, if you will, in front of the joint session of Congress by President Trump, where he is talking a lot of things. And he's talking his budget. He's talking the health care. We're going to find out just what he can do and not do. This is going to be a very interesting time. And after his TV speech today, the market rallied, fell back, and has since come back up. So let's go to the grains and stay there. As you can see, you've now gone from 1080 down to 1006. Now, in the U.S., one of the few crops that the farmer's looking at current prices that he can make on is the soybean market. The corn market, not that profitable. Wheat market, not that profitable, as they're all down, but this is the one that people are rushing into. And I've swung over to a down thrust because now the market, you can argue, came up and then right back down through this important low. Some support is right here at the $10 level, and I've pointed that out for a bit now. And on a closing basis, you've gone from 1071 3/4 to today's low close of 1022. When we take a look at a daily bar chart just on its own, I think you'd agree. Overall, you got the lower highs. You certainly got the lower lows as you look at it. And the swing line is saying that. In fact, it's got a high here of 1073. And with the outside day down today, you take a look at today's high of 1029 1/4, and that'll be the new swing line high. Now, there's also a chance here that if the market gets over that number in the next 48 hours, that you lay what we call a bear trap at this number, whereby the market has an outside day down, you take out that high, and you often make a run for the nearest key moving average. In this case, the problem is it's only 1030. It's literally where it's at the 100-day average. Another thought, these are the first tests of being under this 1030 level. You've heard me say this so often. First test, within a few days, often comes back to that 100-day average unless the market's really ready to embark on a big break. I don't know that it is at this point. Bollinger Band's doing a good job. They stopped the break here. The market rallied, got up near that 100-day average and right back to the lower Bollinger Band. And when you look at the slow stochastics, you're oversold as can be. So I happen to think the pros are taking money off the table. Why? Oversold condition, under the 100-day average, Bollinger Band supporting the market. That's all. I'm not saying it can't go lower. That's what I think they're doing. In the soy meal market, you're so oversold, where do you go short that you're comfortable? That's the problem. The trend is clearly down with lower highs, lower lows. You're under the 18-day average of closes, 341.30. But, if you drop again, maybe you get down to that lower Bollinger Band. Staying under it, I got my own doubts about that. In the soybean oil market, you have an embedded reading now. So what you've got here is a market with lower highs, lower lows, riding the lower Bollinger Band embedded. I think this is where the pros are going to put on their short positions. A good rally in this market this is the market I think they're going to target if they can get a rally out of it. In the corn market, right down to the lower Bollinger Band, and just like it hit a brick wall, it stopped the break. It could drop a little more to 100-day average and play in there, but being this oversold, coming from this big break down here, you're probably going to get a market that wants to take a bit of a break. In the wheat market, my profit objective, if one were short, and I'm not saying I am, I'm saying if one were, is the 437 level. You're knocking on the door of it. If you slide through there, maybe you get to 433. Resistance is rather formidable up at the 452 level, but now I think you're going to take a lot of shorts away from wanting to sell a rally because of the oversold condition. In the sugar market, I had mentioned to you, I thought this was a trap back to the upside. I don't think this is a trap anymore. I think the market's breaking out to the downside. Yes, it's oversold, it's difficult to get short and all that nonsense, but now you've got 2 days under this Bollinger Band and you're bending it out. Now I got my doubts. I think you've actually broken the market out to the downside now. I'm not there in the coffee. First day under the lower Bollinger Band. Let's see if it bounces back up with this oversold condition. Not the same pattern as we have here where you hit it and then you keep dropping through it and you're widening it out. It could develop into it. In fact, all the softs are looking suddenly weak and vulnerable. Even the cocoa. Now, I would have liked to have seen the cocoa, instead of stopping today at 1967, take out 1964. That way I'd have at least had the pattern of lower highs and lower lows. Now I'm stuck with the pattern of higher lows and lower highs, all against an 18-day average of closes with flat momentum. Not much I can say on that chart. In the cotton market, do you see the battleground? It's the 18-day average of closes. You got up to it last week on Thursday, Friday, and fallen back on it today. This market's trying to figure out what to do, but in the process of trying to figure out, you've already had lower lows and lower highs. You're in a downtrend now until you take out 77.19. Potential might be the lower Bollinger Band, one of the areas to consider. The cattle on feed report came out pretty flat, not really bullish or bearish on Friday, but because the market was down so much into the 18-day average, you had a bit of a bounce today. Do you see a trend there? I don't. I see a higher high and a lower low stuck sort of against the 18-day average with flat momentum. In the April feeder cattle, you bounced away from the combination of the 100-day average and the lower Bollinger Band right back to the 18-day average of closes. But again, you're not trending. You have a higher high and a lower low stuck at that number. Don't know what to do with that. The hogs entered a bearish trend. They have the pattern of lower highs, lower lows. The sell zone could be the what I call that line in the sand, that 18-day average of closes at 69.95. The risk factor, if you're going to keep the bear trend in place, is to not get back over 71.57.5. But, and there's a big but, look at this number. The slow stochastics are oversold. The way I teach charting, I would be telling people you don't sell into oversold conditions. Which brings me up to all the things that I do. I offer a heck of a lot of research, and you're looking at it. 20-day free trial, and then if you want to be a buyer of my research, and it's not expensive, a couple of dollars a day, not $5, a couple of dollars a day on average, I give you a $20 discount for your first 30 days. And it's not month to month, it's 30 days to 30 days approximately. So what you get are my morning videos. They look like this, and I cover all the charts you can imagine. I start off with the stock indices, I move into the currencies, the interest rates, you'll be moving then into the metal markets. It just keeps going. Soft commodities, the grains, the energies, everything you can think of through there. Then I write reports. Today I did 4 of them already. And on them I give you market details, cover the day's events, what I think's moving the market, why, and then I back it up with a written buy here, sell there idea. At nighttime, I update one last time about 8 at night, and then in the morning when I do my video, I review everything there and show you why I see those trades, but not just those. I'll show you other ideas. All I'm after is giving you an idea. You may already want to make a trade and maybe you need that push. What do you have to lose? Give it a free try if you haven't tried it before. If you tried it, all you need to do is IRA, capital IRA 20. Enter that when you go to our website to buy your research, and guess what? You'll get that $20 discount off your first 30 days. I'm Ira Epstein. Thanks for watching, and I'll see you tomorrow.